It's you, me, and a few hundred other people in here, but it's good stuff. We're actually broadcasting this to three different locations. So some of you are over here, some of you over in YouTube. It's chaos out there. All right, making sure everybody's good to go. So yeah, good. All right. So hey, chat in again. Where are you guys joining from? Yes. Um, and we'll get started here just momentarily. As I do, I'd like to make sure that we're hearing us right. Cool. So you can definitely hear us. All right. A couple of Floridians. It's quiet in here. Usually, people are more than interested. Gilbert, Arizona. It's chilly. Ooh, Bozeman, Montana. I actually got a really close friend that's up there right now. I got a place up there and the place in the Virgin Islands. Good stuff. All right. Iowa. Cool. Wisconsin. It's another good friend up there, which is Rylander, Wisconsin. I hear about that all the time. So one of my best friends and kind of former market maker, Frankie Walsh, I worked with him for years. Lives up in Rylander, Wisconsin. Although he's actually headed here to Arizona right now. So Alfonso, okay, sweet man, haven't seen you around in a while. Okay, Alfonso. Let me guess. Texas. I think Alfonso was Texas, if I recall correctly. So, by the way, I don't do names very well. Like names, faces, places. Ah, Alfonso, Texas. I knew it. Okay. The I can't say Adirondack. I'm from New York and I can't even say it right now. Nice. So, all right, welcome everybody. So today I am broadcasting from Paradise Valley, which is it's a little town in Scottsdale, Arizona. I live down in the Virgin Islands just over half the year and back here. I'm back here right now, rebuilding our home over here. Our home, we were down on the island in January. We were down on the island, and our home here pipe broke and flooded the entire house. So we had a pretty much down to the stud remodel, and it's taking the better portion of a year. But I kind of have to be on site a little bit. I work out of the guest house here, so I guess there's worse places you could be than Arizona in November. It was chilly this morning, man. It was like 42. I'm laughing because somebody just typed in like Milwaukee. So this it's good, nice. Anyway, welcome everybody. So interesting day. I mean, we could probably spend hours just talking about what's going on inside of the marketplace this morning. But look, the S&Ps are up some 131 handles. One of the funny things is so many people, and I'm actually going to start with this because it fits perfectly into today's conversation. There's so many people that are looking at the move and they're like, it's an unprecedented move to the upside. If you haven't learned anything in the last 24 hours, the number one thing you want to learn is you should probably not listen to the media, including the financial media. Like if that's the lesson that we're learning right now, and I'm not trying to mess with anybody. I'm deadly serious. The marketplace knew this outcome well before. And how do you know that? I've been talking about. There's 2 weeks ago, we did a video that talked about the rally inside of the U.S. dollar, projecting obviously a Trump win. We talked about the sell side activity inside of the bond market, projecting a Trump win, and on and on. But when I talk about like an unprecedented move, okay, there's nothing unprecedented about it. Here's a line. Okay, and we're going to talk extensively about this today. This is what we term expected move. And we're going to talk a lot about expected move today. Some of you already know what that is, and some of you don't. Ooh, we're doing exactly what we expected here. Just exactly what we expected. That is one of the most important takeaways from the entire election process is that the markets were able to handicap this just basically spot on, people. So if you look at this, it's a line that we drew like last Friday. Look at trade today. I mean, we're just ebbing and flowing right on this expected move. It's getting a little heated right now, but there's nothing unruly about some of the price action that we've seen right now. So with that, let's get started. Let's get started here officially. And I know I'm already 5-7 minutes into this, but again, it's on everybody's mind out there, right? So with that, again, welcome everybody. My name is Don Kaufman. This is Earnings Flips. I'll explain exactly what that means here momentarily. Risk disclosure. We're no longer financial advisors nor a broker dealer. I always say that because, again, I spent about 15 years inside of the brokerage world. A copyright disclaimer. This is mine. You can't use it without the express written consent of the NFL. Huh? Yeah, maybe. No. Anyway, I really throw this in here also. If you need to get a hold of me after today, support at theotrade.com, but put my name, Don Kaufman, in the subject, and it'll go right to me. So I always want people to know we can be reached. We can be reached by phone. Email is the easiest way to get a hold of me because I don't like to pick up a lot of phones, especially when I'm live on here. So here's a little bit about me. I'll give you guys the just a nickel tour because looking at some of the names in here, I recognize a lot of the names that are in here. Apparently, I know where some of you live as well. We've had long conversations. Anybody here brand new? Is anybody here brand new? Let's just ask that question over here. Okay. If you're new, would you please come out and let me know? As I said, I'll kind of give you just the nickel tour over here. So everybody always has this story about how they got involved in trading, and I just say the easiest way for you to understand me, I grew up around it. I literally grew up around trading. One of the reasons people, how did I end up in Arizona? So I was born in New York. I moved around a little bit as a kid, but we ended up when I was in high school. We actually moved to Arizona when I was in high school, and in doing so, how did we end up in Arizona? We had family here. We had family here, and they were retired traders from Chicago Board Options Exchange. So I literally I grew up in and around the business. I can remember times where I was like, 7 or 8 years old, going to the Chicago Board Options Exchange. So no memory of when I learned, like if people learned a second language when they were a little kid, they didn't remember it. I don't remember when I learned what a call or a put is. Everybody's always got this story. I was a teacher and then I was a trader. I was a taxi cab driver and then I was a trader. I was a trader and then I was a trader. I actually had no intention of going into this business though. It's not what I studied in school, but 3 weeks out of college, on a whim, I ended up clerking on the floor at the Chicago Board Options Exchange. 3 weeks after that, fun story. 3 weeks after I'm in Chicago, trader didn't show up for work on time, and when he did show up, he was still intoxicated from the night before. They stripped him of his position and his seat, and rest is kind of history. So I started trading at 22 years old. Here I am. I'm staring down the face of 50 right now, people. But shortly into my trading career in Chicago, I met a couple of guys. I knew him from like the day that I was down there, but I met a few people. One of them, his name was Tom Sosnoff. His partner was Scott Sheridan. They invited me to come with them. They're like, look, man, you're like 22, 23-year-old kid. We're going to start a brokerage firm. We have no idea what it's going to look like. It's a stupid name right now called Thinkorswim. And I'm like, that's either the dumbest name or the smartest thing ever. So I went with them. And this is now like 18 months into my trading career. I had left, Chicago floor and went actually to this company called Thinkorswim. And I actually built a division of Thinkorswim, their entire education division of Thinkorswim. I went on actually to run education, not only at Thinkorswim, but we took the company public in 2007. I was there when the company was acquired by TD Ameritrade in 2009. I actually went on to actually run all of the education for TD Ameritrade. My last, kind of commitment at TD Ameritrade, we had 768 people just in our organization. It's phenomenal size because when we started Thinkorswim, I was like, it's like 10 people sitting around a desk. And then I had 768 people just in my organization for 7,000 in the company that we were at that point running. So that's kind of the history of me getting involved in here. By the way, I had a 5-year lockup clause. People always ask why I left the brokerage business. I had a 5-year lockup clause. So at the end of the 5 years, 2015, I was out of the contest. got the hell out of there. The regulations are horrible in the brokerage business. Got out of there. We started Theo Trade, and we actually pulled a lot of the people that I worked with, and they worked in our group. We pulled them over here to Theo Trade. We've got Blake Young, we've got Brandon Chapman, we've got Jeff Bierman. Jeff Bierman built the charts. For those of you that if you've ever used, like Thinkorswim charts, Jeff Bierman built a lot of that. That's one of the core areas of our group here. Corey Rosenblum, Tony Rago, Gianni DePoce. So these are traders that I've worked with for at minimum like a decade. Most of them I know for over 20 years. So what you're going to learn here today comes from the knowledge of having watched order flow for many years, both at Thinkorswim and TD Ameritrade. I mean, one of the things that's so cool to talk about here is, look, for the better part of 15 years in the brokerage world, I get to see all of your order flow, 100% of it. Meaning that we got to see, like, if you did an iron condor, we knew if you made money. Butterflies, we knew if you made money. It was great. It was great, how much you learn from that and studying it, and that's really what kind of brings us here to Theo Trade. So let's get into it. All right, let's talk about earnings and earnings flips. Okay, a lot of today's presentation, I'm just going to let you guys know, a lot of today's presentation is not on a PowerPoint. We're almost done with the PowerPoint portion of it, but I want you guys to know, like, I try to keep this as dynamic as possible. And if you've heard me do this before, you've definitely not heard this because look, I'm going to place a couple of trades while we're doing this because I've got to place a couple of trades today, and let's get into it. So there's a lot of misnomers, shall we say, excuse me, about earnings. Earnings can be scary. Hold me. It's one of the things that people always, earnings can be scary. They are. Earnings are too volatile. They are volatile. Okay. You shouldn't trade earnings. Why not? There's actually some phenomenal opportunities out there, and that you can't trade earnings successfully. And a lot of people have heard, okay, this earnings in terms of trading are one of the most well-studied areas of all trading, period. Okay. Earnings are so well studied. Now, then there's other people that turn around and they say, well, you should wait until after earnings to trade. Okay, you should step out of existing trades around earnings. There's no need for that. You should just buy high flying stocks ahead of earnings, which seems crazy. Have you looked around lately? And you should, maybe just ride out earnings and hope for the best. Okay, hope. Okay, for lack of a better term, is it's not a good strategy. Hope is not not so good, not so good out there. But don't believe a lot of what you hear about earnings, because I'm just going to break this down as cleanly as I possibly can. Trading earnings, okay, is a direct formula. And that's exactly what we're going to bring to you here in earnings flips. Trading earnings is extremely what I would term quantitative. Does anybody know what that means? Quantitative? Anybody? Okay. What does it mean when I say like quantitative? It's very pure. Like, I don't care. I literally do not care if the earnings are good or bad. Okay. I don't care what anybody thinks about that, right? It doesn't make a difference. I don't need to know, okay, how the market's going to react to the earnings. No one is going to be able to predict it. And I've said this time and again. If we're going to talk about like Qualcomm. Qualcomm has earnings tonight. We're going to talk about it, right? If I had Qualcomm, and I want your opinion on this, okay? So this is the interactive portion of today's session. So jump in here at any time. If you had Qualcomm's earnings in your hand right this moment, do you think, okay, that you could justify a trade off of it? I'm serious about that. It's a valid question, right? If you had Qualcomm's earnings in your hands, like in your grubby little paws, and you're like looking at their earnings right now and you're reading through it, do you think you could actually predict movement? All right. It's a really valid question, because I think that the more new you are to this business, you're like, hell yeah, man. I know exactly they are going to make more money this quarter, but that doesn't make a difference. Who cares if they made more money this quarter? I mean, maybe their guidance is a little bit light. So you don't know, like, they made a ton of money this quarter, but their guidance is light for next quarter, or vice versa. They lost a huge amount of money this quarter, but they're going to guide higher and they're going to do a stock buyback. You want some fries with that? Like, it is ridiculous. And yet people are constantly, you watch, and again, the biggest takeaway from the last 24 hours is that all the media, okay, is for nothing because they couldn't handicap, what was right in front of them. They literally could not see what was right in front of them. I don't care what the institutions are expecting. I don't care what the media says. It doesn't make a difference. Okay. You're going to use my criteria. You're going to know which earnings are the opportunities. Okay. And which one are the traps. Period. We're going to be, when I say very quantitative, this is a direct approach, okay, to earnings. We're just basically going to say there's a reason we call it earning flips. We're going to say, look, we can go this way, we can go this way. And I'm going to tell you something right now. It does not matter if you're wrong. Okay. I'm going to say that again. It will not matter if you're wrong. Will you have a losing trade if you're wrong? Yes. That's okay. Because when you're right, okay, it's like getting up to the plate and striking out. But the next person that comes to the plate, they get up to the plate, like grand slam home run. That one's out of the park. Okay. And the bases were loaded. And then the next one you get up there and you swing as hard as you can, you strike out. And the next one you go up there and you swing as hard as you can and you strike out. Okay. But by the fourth time, grand slam home run. We're going to show you exactly that. I'm going to show you, okay, how to follow my earnings flip criteria. And I think you guys will appreciate this. This is, in terms of like some of the trading I do, to me, this is like, it's the most, I guess, fun out of it. By the way, I like to trade. Like, I like sitting down to my desk here and trading. Like, I don't, people sometimes think it's an arduous process. It doesn't have to be. There's a lot of research. It doesn't have to be. This is pure. This is quantitative. What I mean is math. Okay. I'm not going to sit here, by the way, and bore you with like all this math, but I am going to show you exactly how this works. Like, look, the opportunities are clockwork. When the earnings are coming out. Like if I said, what earnings are coming out? I can go right over here to Thinkorswim and I can go to the scanner. Let me close up this left side bar. Let's not distract you. Okay. And I hit scan. There's 23 stocks that are coming out with earnings. In what? And again, I'm going to show you. Earnings. Has earnings anytime in the next, it's 2 bars, but those are days. Okay. And this is the S&P 500 intersected with weeklies, meaning that the stuff would have weekly options on it. So, and here they are. Okay. And the ones that really kind of like strike me as doable, right? Well, there's a few of them, but nevertheless, okay, Qualcomm is like the big boy in there. Qualcomm. So Qualcomm, we're going to look at this one in a minute. Right? What's Qualcomm doing? Is it going to go up or is it going to go down? And the answer is yes. And I don't care. And I don't care if I'm going to be wrong in here. So we're going to come back to Qualcomm here momentarily. Now, what's cool about this is it's like clockwork. You can actually sit here and plan out your entire schedule, right? You plan out your schedule and you can go out there and just basically say, look, I'm going to do 3 trades, on this Thursday. I'm going to do like 3 trades like next week. You can see all the earnings that are coming. You don't have to necessarily use, the earnings calendar. By the way, there's earnings calendars on like all these trading applications. You can go to the calendar over here, turn on earnings, okay? And you can actually sift through all the different earnings that are coming out. Exciting. There's 284 products coming out with earnings. So that's fine. Like, again, I don't want you to read too deeply into that. You don't have to trade every earnings announcement. We're just going to do a few, okay? And what works? Well, you're going to find out. It can work very, very well. So what other strategy, though, allows you to know the days, the weeks, even the months in advance? Like, when earnings season's coming, you're like, all right, everybody quiet. This is big time earnings week. And I love that. And this is actually even though we're starting to taper off in earnings now, last week was a big week, we're starting to taper off. You can always, okay, find stuff that's going to have earnings. Like, and when you go, but no, it's not earnings season. And then it's not, but it is earnings season. It's always earnings season because there's stuff that's like what we could term out of rotation, which is like here in Walmart. Walmart's coming out in kind of an odd time. And you got stuff like Costco, and Costco's coming out at an odd time. And then like Nvidia is not in cycle with everything else. So it's coming out like on an odd time. There's always something coming out, right? Always something coming. So again, it's not, only the timing, okay, of the trades clockwork. it's just the setup is so straightforward. So look, what we're going to do here today, this is not going to be expensive. This is not like sitting here, right? Excuse me. This is not like sitting here and trying to like flip homes or look for some like huge anomaly. It's not at all like that. It's not expensive. The strategies that we're going to deploy here, in fact, I'm going to show you right now. The strategy we're going to deploy here is going to have dollars at risk. How many people, okay, and I'm dead serious, but how many people are kind of cool with the idea of having like, I don't know, $50 at risk on a trade? If you want to have $50 at risk on a trade, you okay with that? Anybody? Could you do a trade around earnings for $50? Like everybody has to start somewhere. I don't mind saying that. Everybody has to start somewhere. And you could be what I term Captain One Lot. Captain One Lot basically means like one contract. And you sit here and you talk about Captain One Lot rides again. I feel like I should wear a cape when I say that. Anyway, yeah, this is not going to be expensive. Look, here's a trade. Okay. And you know what the irony is that of that? I'm trying to write on my screen with the wrong pen. When you take a look at the trade right now, this is Capital One. COF. It's Capital One Financial. Capital One Financial. Now, if anybody knows exactly when I did this trade, well, you know what? I did a similar, not identical, I did a very similar presentation to this. Okay. And ironically, that presentation was done when? Apparently on 10/24. Now take a look. What you're seeing right here, this is a screenshot. This is a screenshot taken directly from Thinkorswim. So do you have to trade on Thinkorswim? Absolutely not. Most of the time, I'm actually trading on Tasty. But I use Thinkorswim because it's probably more broad-based. Like a lot of people are familiar with Thinkorswim, and they're familiar with me from Thinkorswim. So yeah, sure, what the hell, I use Thinkorswim. Can I ask you guys, did anyone attend that presentation and do this trade? Did anybody attend the presentation and do that trade? Because I did it while I was live, okay, on that presentation. You can see the exact date, time, everything over here, right? So cool. All right. Yvonne did it. Blake did it. Okay. Blake doesn't count, man. Yeah, you know. Blake and I have been doing this together for a long time. Okay. Christopher did it, but didn't know how to get out of the trade. Okay. Christopher, it's easy to get out of the trade. But this trade, okay, had well, 28 cents at risk. So every $28 I invested, I got back 110. I want to make something clear. Do you have to do the trade? It's $28. The commissions on it were negligible, right? 65 cents a contract times four, yada, yada, yada. So you have like $3 of commissions in here. But every $28 I invested, I got back 110. It's 293% return. Now, did you have to do for $28? No, you could have done 10 contracts, which is $280 to got back 1,100 bucks. So that's fine. Let's play ball. This is a trade that I did literally during the last presentation of this, and that was done on 10/24. It's all recorded. And the trade. I apologize here. I do have two different positions there. That's really, really weird. Bear with me for a second. Did I take a wrong screenshot? Oh, that's CL. That's hysterical. I actually took a wrong screenshot on that one. So I do apologize on that particular front. That somebody actually caught that is awesome. Let's actually go in here and find out. Okay. Yeah, I'll come back into this later. The next trade in here is Microsoft. So days after that one, kind of went hog wild. I got this one right. That's the difference between CL. Okay. This one is on Microsoft. Okay. And on Microsoft, put this on 1030, exited at 1031. So the trades predominantly last, okay, approximately 24, okay, to 48 hours. That would be absolutely, okay. Yeah, by the way, I totally caught the CL versus COF. It can happen to anybody. So here is, again, we hit Capital One Financial, though, very, very nicely. On here, this is put on for a period of approximately 24 hours. It's every $91 I invested, I got back 250. It's 175% return. You know, the irony is the Microsoft one was not really working out very well. Kind of caught that one towards the end, but again, this could be $910 to collect $2,500. So 175% returns, 175% return. Last week was like last week. I have to tell you, was like the grand slam home run of earnings. Here's one that was actually put on Halloween. This is actually Apple. Apple put on for $78, took it off for $220, 182% return. Again, it could be $780 to make $2,200. It could be what you want. It could be, $150, be able to make basically 450 bucks. Here's actually Intel Fly. Okay. In terms of Intel, right? This is a trade where every $39 invested, okay, I got back 95. It's 144% return. And as I said to you, the some of the grand slam home runs. Here's actually Amazon. Okay, Amazon was actually put on Halloween, taken off obviously on November 1st. Every $48 I invested, I got back 215. It's 348% return. So I mean, look. And by the way, I want to bring up the COF trade because I definitely screwed up that slide. Okay. So, and by the way, what happened to Clorox? It expired worthless. Who cares if it expired worthless? Doesn't make a bit of difference in this particular trade. Let's come back here like 20 days. I'll actually pull up the trade history. Okay. So I definitely screwed this one up. Here you go. By the way, you can see literally in COF why I screwed it up. I actually paid 28 cents and 30 cents respectively, closed it. I did multiple contracts. So I just want you guys to see exactly where the screenshots are coming from. So I do not make mistakes, but when I do, it's something spectacular. So I actually put the Clorox trade in there. I paid 28 cents for the Clorox trade, but I actually meant to put the COF trade in there, which ironically, okay, I also paid 28 cents and 30 cents respectively. It did not change the percentage return on there. Did it? Okay. So by the way, I'll show you every single trade in here because people go, those can be fixed. Yeah, you can't fix this. There's Microsoft. There's the Microsoft trade, 91 cents into that. Okay. Here's the Amazon trade. The Amazon trade, 48 cents and 215. What else we got? Apple. Okay. The Apple trade, 78 cents into 220. By the way, you want to see someone really, really wild? Look at the SPX. In the SPX, I changed 60 cents into 345. Don't tell anybody. I take shots constantly in the SPX, but who cares? I'm just striking out all the time. But when you make 345 off of a trade, what's wrong with that? Okay. It's winner, winner, chicken dinner. I love showing this because, you have to appreciate, like, even if you don't understand like the trading side of it yet, you got to appreciate, like, you're seeing the returns over here. You don't even know what the strategy is yet. It's okay. We're going to go through that again. Before we do that though, let's do this. Let's go live. Let's go live into the marketplace. And we're going to go live in the marketplace because I think the best way to actually explain this, okay, is to kind of, purify what you think about like earnings. And I say purify it like, look, we were talking a moment ago about Qualcomm. Okay, so we're talking a moment ago about Qualcomm, and Qualcomm's kind of like broken to the upside. Okay, can I ask you guys something? What do you think about Qualcomm for the earnings tonight? Going bullish or bearish? And please don't use any MACDs and Fibonacci's. And get your Bollinger Bands. I got Bollinger Bands. Okay, what do you think? Bullish or bearish? Yeah, anybody? Okay, bull, 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 bull. No idea. All right, I like it. I'm going to go bullish. The consensus is bullish. Hey, this is a voting world. It's a voting world, and I'm just living in it. Okay, there's only like one bear in here, and like there's a couple of no ideas. I like that. I appreciate that. And Alex is a bear. Okay, I'm gonna go bullish because that was the consensus in here. Ken's a bull. Okay, Walter's a don't know. That, by the way, don't know is a viable answer in here. So there's a reason we call this earnings flips, and I want you to actually think of a coin flip. Bing, heads it's bullish, tails it's bearish. I mean, this is like the kickoff of like an NFL game. So how is this going to work? All right. What we actually do with earnings flips, okay, is this. This is an option chain. Now, time out. Do you have to know a lot about options to do this? Absolutely not. Okay. Like, look, some people do not speak geek, but regardless of what you know about options, okay, or lack thereof, options is not, it's not like a new language. There's like a couple terms, definitions you got to learn, and that's it. And frankly, most people here have actually traded options before. Is there anybody brand new that's never traded options? Okay, you don't speak geek, and it's okay if you don't speak geek. right? Like I totally get it. I just want to know what we're in store for here. And I want you guys to know, like, well, take it easy. Okay. I am new. So anybody else? It's okay. All right. People, admitting it is the first step today. And I'm here to obviously to bring your attention to a strategy that I've been using for years, and we've just further refined the criteria over here, and it's hitting on all cylinders right now. Look, earnings are an incredible time because there's an efficiency that takes place in a marketplace. And what I mean by the efficiency that takes place in there is this. When people look at options and they don't really know much about options, they don't really understand what options do is kind of handicap forward risk. Okay. Like when they look at different expirations, there's a 2-day option, a 9-day option, a 16-day option, a 23-day option. What's the market trying to do 23 days out? What's the market trying to do 23 days out? It's trying to figure out what's going to happen 23 days from now. Great. That's it. What's the market trying to do 2 days out from now? It's trying to handicap what the market's going to do 2 days out from now. That's what an option marketplace is. An option marketplace is like step up, place your bets. Why? Because the market is going to move. How do we know the market's going to move? Because there's earnings coming out tonight, right? How far is this market going to move? I know. I have an answer to that. It's called the expected move. Dun, dun, dun. Okay. What's the expected move? We're going to call expected move EM. Okay. Expected move. Right over here on the right-hand side of your trading application, you have expected move. Expected move right there is plus or minus $13. Just round it. Just everybody calm down and round it, right? But it's $13.14. Just calm down. It's $13. Okay. How far is Qualcomm going to move tonight? Probably about $13. Which way is it going to go? I don't know, but I can't wait to find out. Does it have to move $13? No. Okay. But the way that earnings works, I'm going to blank the screen here for a second. Okay. And I'm actually going to bring this up. I'm going to draw something for you. Okay. This is a distribution curve. Okay. Qualcomm sits right in the middle, basically at $172. That's where it's presently trading. Can Qualcomm go up? Yes. Can Qualcomm go down? Yes. How far? It can go up about $13 or down about $13. And people, that is what we call, okay, a standard deviation. Okay. You don't have to understand. What you do have to understand is this. There is an incredible efficiency in this trade. See, most of the time, okay, when you actually talk about statistics and so forth, well, it's supposed to go anywhere inside this range. There's a really interesting, well-studied anomaly, okay, around earnings. It's a very interesting anomaly around earnings, okay, and that's this. We're often drawn with a high probability to one of the edges of expected move. We're often drawn, okay, to the expected move. And we're going to talk about all the different trading applications because some people are on Thinkorswim and some people are on Tasty and some people don't even have expected move. By the way, can I be honest with you? If you're on a platform that does not have expected move, you can still figure it out. But oh my gosh, just please run because it's 2024. And if the trading monkeys haven't figured that one out, sometimes the little hamster gets stuck in the wheel because expected move it's been around since like the 1970s, right? So Tasty absolutely has expected move on there. Okay, it's got it on there. The thing that you have to focus on though is when you have the expected move, right? There's an incredibly high probability of hitting the expected move. You want to know the probability? Okay, it's approximately a 1 in 3 chance of hitting the expected move. About a 1 in 3 chance of hitting expected move because you could go up here, you could go down here, you could go somewhere in the middle. Okay, but 1 out of 3 times you actually hit the expected move. But when the trade pays out, it's paying out better than a 1 to 3. Okay, it's such. And by the way, people go, "How do I solve for expected move?" Just everybody calm down. Okay. All you have to do is add the put, okay, add the call, says 13.25. It's about the expected move. If you're on Tasty, okay, where on Tasty is this? Let's actually come into Tasty, type in Qualcomm. So we go to Tasty, go to Qualcomm. We're going to open that up. Look, it's $12.13. Why does it differ? There's different models. It's okay. By the way, to be a couple of pennies off one direction or the other, relax. Consistency is the key over here, but seriously, relax. And the easiest way to do this is just add these puts to these calls, and there's still 13.25. That's basically your expected move. The marketplace, and this just blows people's minds. The marketplace, okay, is handicapping, if you will, what the forward risk should be. Okay, again, the marketplace is kind of handicapping what the forward risk really is. What that basically implies is you don't have to necessarily be right. Okay, why? What I'm going to do right now is let's come back to our little distribution curve. Let's come back to the distribution curve and kind of explain it this way. So we have this number of $172 stock, and you think it can move up 13 bucks or down 13 bucks. Now that's not my, math. Actually, you want to know the irony is I helped build the expected move equation on Thinkorswim. It is my math. So people always ask me, is Tasty better? Is Thinkorswim better? I like the charts on Thinkorswim, but Tasty, the expected move equation on Tasty is actually probably better than this one. Or equities. Anyway, if you take a look at this, what if I put a trade like so there's about a 1 in 3 chance of this hitting? You go, what's going to happen if you do 3 trades? If you do 3 trades and one of them hits, and that one's a grand slam home run, is it worth it? I'm asking you, okay? If I do 3 trades, okay, and one of them hits, it depends on the return, but look at the previous trades I was doing. Okay, look at the previous trades I was doing here. I invested $48 and got back $215. I could strike out 50 bucks, I lose 50 bucks. 50 bucks, I lose 50 bucks. So now I'm down 100. On the third time I step up to the plate, he hits a grand slam home run, and the fans go wild. Like, you got to realize this is about number of occurrences. Okay, it's about number of occurrences. It's not about necessarily like being right or wrong. I don't care. Why? Because I'm going to take, because you guys said you're going to be bullish. I'm going to take a couple bucks, okay, and I'm going to put it right here. I'm going to triangulate right around that move, okay? And if we go up $13, it's winner, winner, chicken dinner. That's it. I mean, you're like, that's a strategy, okay? Couldn't be more simplistic than that. Now, as Christopher was early in the chat, he found out, okay, he didn't know when to exit the trade. Yeah, that's what I'm here for, is to help in that respect. So right now, okay, let's actually let's bring up our trusted calculator. Okay, so this is when I was like, this is higher math. Okay, we're going to take 100 basically in $73 stock, and we're going to add like 13 bucks to it. Equals basically 186. Now, there is no 186 strike. You just round anyway. So this was, somebody's like, it's $12, man. It's $12 on Tasty. Yeah, it was over here, but there is no 186 strike. So what I want to do, okay, is I want to put something right around that 185. I want to wrap stuff around. Like, if you remember that that was a bad distribution curve I just drew. Bad animal. Okay. I was up late last night. Anyway, if you look at this, up 13 bucks, kind of surrounds like the 185. And I'm just going to tell you guys, like, there's not a lot of thought that goes into this. I go, stock price 172. This says 13. Add them together. If you're bullish, beautiful. Okay. There's a little bit of logic into this. We go buy deep and wide. 1 month, 2 strike, butterfly. Okay, here's $5 wide fly, trading for about 51 cents. By the way, hit confirm 10 cents a trade, fails immediately for 48 cents too. How about that? Okay, it's on, people. And you go, oh, that seemed interesting. What did you just do? I'll tell you exactly what I did. Okay. First of all, trading is fun for the whole family. What I just basically did is here is where the stock currently is. Okay. If we hit the standard deviation, which is right there, I'm a winner tomorrow, a big winner tomorrow. Now, even if it doesn't hit it tomorrow, this trade still lives till Friday. Okay. They live on for like, if you do them like on a Wednesday, they'll live on to Thursday and Friday. By the way, if I'm wrong, what happens? If I'm wrong, you go, oh, but still my heart, I'll lose 48 cents. Okay. And by the way, I paid, I'm going to create a duplicate order over here. I paid 48 cents for that one. Okay. That's it. So, and again, I think people, they think somebody said the video is frozen, but it's not. Okay. I am I'm looking at my own video over here. So I just wanted to make sure, I want to make sure it works. So anybody can do this trade, but you have to obviously know. So Mike was asking, determining the width. Yeah. Okay. Don't you worry about a thing. I got you covered on that one. So let's go through possibly just one more. Let's go through one more. So the other one that I was thinking about over here is Zillow. Okay. I was thinking about Zillow. Although I honestly don't even know if I can get a good fill in Zillow. So let's go look at the chart in Zillow. Well, Zillow was here and now it's here, but it's definitely there. So Zillow is actually down a little bit. I'll take the bearish in Zillow. Okay. By the way, I have not, I want to make something clear. Like I have like a little notepad over here of like, okay, so I picked Zillow because it came up in my scan. But I actually don't have this one kind of planned out. So what I'm going to do is try to handicap it kind of with you. If you take a look at Zillow, all right, it's a what? It's a $58 stock. Okay. 58.31. I know we have some electrical engineers in here. And 58.31, let's say minus, okay, $5 and 85 cents equals like 52 and change. So somewhere around like this 52, 53 strike, it's 52 and change. I'd say 53. Let's go over here. Let's go buy. Let's go deep and wide. 1 month, 3 strike butterfly. It's like a $3 wide fly. Look at that, 41 cents. That'll play. That'll play. Okay. Confirm and sends the trade. Okay. Oh, no fill. No fill. Let's come in here, cancel, replace, see what I can do. Come on, there's a little bit of a wider market in here. All right. Let's see if these guys can actually fill me. So there's times where, look, I've been doing, oh, look, I crashed Thinkorswim. That's awesome. Okay. By the way, leave it to me to break a platform that I helped build. That used to be my job, you know. Can you break this platform? Hell yeah, I can. I can break anything. Um, no fill in here. So I'm having a challenge getting a fill because the bid offer spreads are just a hair wider. And by the way, I know exactly where I can fill in here. Okay. I know exactly where I can actually fill in here. 56 cents is not it, but I am going to mess around right at about this trade should go. Okay. I'm just going to show you this trade should go between 45, okay, and 47 cents. That's what this butterfly should be worth. It's 45 to 47 cents. Okay. So I know exactly when I'm getting in here, kind of what I should be paying. So between 45 and 47 cents, and this trade should fill, and there we are. There's the fill. It's 46 cents. Okay. So awesome. Okay. Good. Done. There's 2 butterflies. I have 1 bullish, 1 bearish. Now I can actually look at other products. So I think like Take Two Interactive had one coming out tonight. So Take Two, all right. Take Two Interactive. Yeah, this is like after the market. Okay. This is another one that's a possibility. And again, it's up today. And is there enough liquidity in here? It has a $10 expected move. So it takes you to like to somewhere right here, 77, 78, right? I mean, this one is, it's weird because like $10.30, you'd have to round it. Okay. By the way, somebody's like, Ken was like, how did you arrive at that price? Oh, I don't know, sitting in front of the screen for like 25 years. I made markets for like years. So I know exactly what a $3 wide butterfly should be priced at unequivocally. Like, and it's just, that's, you know, in my nature. Like by the way, you'll notice a lot of the butterflies that I do, even if it's a $5 wide fly, would cost like 48 cents. Okay. This one's at 39 cents. This one's at 78 cents. It's Apple. It's $5 wide fly in Apple, 91. Okay. So it depends on the width of the fly, but I'm pretty damn good at like handicapping what these things should be worth. The other thing is I have traded now just in the last few weeks. Okay. Like a dozen plus of these. So I'm really in tune with what markets are doing right now. Hmm. So here's take two. Take two has been on a rip, just a rip to the upside. Okay. I don't have any feeling about direction in here. I just don't. Like, I'd like to tell you a story that I do, but I don't. I think this thing could easily pop to the upside. Okay. What's weird in take two is it's 168 plus like 10 and change, kind of rounds it to like 180, right? I don't know if this would work. I just, again, I'm doing this off the seat of my pants over here, but at the exact same time, okay, here's a $5 wide fly. I don't think I can fill this one. Like, this one's got to go at like 58 cents, but I think this one would fill. Yeah. Okay. I was going to say it's 60 cents, but no problem. So I just popped on three trades. Now, timeout. What if I were to lose on all three trades? I'm like, that's okay. I could lose on all three trades. I'm fine with it. I'll show up to the plate on Thursday and do it again, because on Thursday there's more earnings coming out. So you guys have to understand. It's like, you don't have to sit here and trade and trade and trade and trade. I'm not trying to make you like trade crazy. What I'm trying to basically do is get you to understand it's about just getting up to the plate, taking some swings. And about one in three of these, you'll knock a grand slam home run out of it. Okay. You always do this as a butterfly. It's that straightforward. And the strategy itself, again, it just couldn't be more straightforward. The key to the strategy, though, is exactly what people are asking. Like, how'd you know to do a $5 wide fly? Why didn't you do a 250 wide fly? Okay. 250. Well, I do 250. I can do $5 wide. Okay. Wait. So then I can come over here and I can actually, like, subcategorize. I just did three of them. Okay. And that's it. I mean, it's that straightforward. And the examples over here, this, by the way, here's one that I don't mind saying, like, did I lose on butterflies last week? Yes. I actually lost on the Clorox butterfly. That was actually, 2 weeks ago. I lost in the Clorox butterfly. I accidentally put this one in here because the difference between COF and CL, looked the same to me. So obviously screwed that one up, but it paid exactly the same for it. The Microsoft fly, okay, the Apple fly, the Intel fly, all of these, you have got to take the swings, because you got to realize you're just going to go out there. Who cares if you lose $40? Who cares if you lose $50? Who cares? That's the area of trading. Like, you don't have to do this $50. You can do this $500, boom, hits for 950. Okay. You could strike out a couple of times. This earnings fly here in Intel, can I tell you guys something about Intel? This one, this one sucked. I didn't do well in here. That's only 144% return. I was not pleased with myself. This one, I am very pleased with myself, because you only have to hit one of these in a week to pay for every other butterfly that you did. This business isn't about making money on Amazon. This business is not about making money on like a Google trade. This business is not about making money on Microsoft. It's about the combination, okay, and what we term, okay, expected returns. What's your expectancy? And if you do, for instance, 6, 10, or 15 butterflies, imagine doing 15 butterflies over an earnings season. How many of those butterflies do you really have to hit on? Okay. Last week, I don't mind saying, I had a stellar week last week, where I actually hit on Microsoft. I hit on Apple. I hit on Intel. Okay. The only one I missed last week, out of five of them, I missed Starbucks last week. You want to see Starbucks? Again, I like to explain that you don't have to be right. Okay. You don't have to be lucky. You don't have to be good. Okay. You just have to show up. Here, Starbucks. You go, what happened to the closing order? Look, I paid $40. Apparently, I like to pay $40 for these things. Starbucks did not go my direction. Okay. Brian, the guacamole king that now runs Starbucks, didn't do it for the marketplace. So, no joke. He's the guacamole king. The guy from Chipotle now runs Starbucks. Can't make that crap up. But this this is what you want to do around earnings. Okay. Take your shots, right? Take your shots. With that, look, introducing earnings flips alerts. Want to learn how to do it? Yeah, well, not only do I teach you how to do it, okay, but I'll actually show you how to do it by firing the trades out to you. So the three trades that I just did here today, even though it was like seat of my pants off the cuff, those trades are actually going to go out for earnings alerts. They're going to go out for earnings flips. Earnings flips alerts. It's $895 for the entire year. Now, we will do at minimum 15 trades per earnings season. Okay, at minimum 15 trades. But I got to tell you something. Okay. I'm probably going to trade more than that. Why? Because I do like to do this. I really like to do this. Okay. The earnings flips masterclass is coming up November 12th. Now, November 12th, that class is coming up. And correct me if I'm wrong, it is 8 a.m. I think it's 8 a.m. Pacific time that the class actually kicks off. Okay. Am I right? I think it's 8 a.m. Pacific time the class kicks. I'm only the one doing it. Okay. I am going to teach an entire master class, and I am actually going to be on that master class. I'm going to actually have Blake Young on there a little bit with me as well. But I'm going to be on the master class. I'm actually going to get to the details of exactly how the trade works. Okay. I'm going to get to all the details of exactly how the trade works. You go, well, what details am I missing? Okay. Well, how do you decide whether to do a $5 wide or a $3 wide or 750 wide? It's exactly what I'm going to cover in there. Tom B just asked that question in there. I got you. I'm going to tell you how much you can pay for the trade, because if you overpay for it, you're done. Chicken's done. You can't overpay for the trade. You can't underpay for the trade either, because if you do like a $1 wide butterfly, it's impossible to make money on it in an equity product. It's impossible. $2 wide butterflies, but yeah, but only in a $20 stock. This stuff is critically important, just critically important. So we're going to have a master's class. It is going to be next week. Now, November 12th. So when I say November 12th, that is next Tuesday. Can you make it? Great. If you can't, don't worry. It's archived. Okay. I will archive all of that. Every spoken word here is going to be archived. In addition to it, you get earnings, the alerts. So earnings season. First of all, we're not just going to wait till earnings season and go bam, 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 bam. But when the height of earnings season, usually fire out on a Wednesday or Thursday. I'll usually fire out about 3 trades, okay, in the height of the earnings season, 3 trades a day in that, okay, kind of genre over there. So that, but not to say like, what am I going to do when NVIDIA comes out? I might take a shot at NVIDIA. Okay. It might take, it might just be a single. Okay. Like we hitting singles and doubles out there. When Costco comes out, take a shot at that. Walmart comes out, I'm going to take a shot at that. Okay. I don't mind taking some shots, but I like the earnings season because I like doing 3 of them, because then I'm like really fine tuned into them. Like I'll do 3 of them, and then I got to try to, work my way out of like 3 of them. But it really is quite entertaining, let me tell you, to do these trades. Like, look, you don't have to sit in front of your computer screen all day. You're basically going to place 3 trades and just walk away and be like, see you tomorrow morning. Okay. You watch them a little bit in the morning. Okay. You'll know that night if they're close. You watch them a little bit in the morning. By the way, don't hold this against me. If all 3 trades tonight go awry, it's okay, because last week I had 4 out of 5 hit. That's like hitting 4 grand slam home runs in a row. It's ridiculous. Only Starbucks missed. Okay. I was on fire, which means I'm probably screwed this week. But don't tell anybody that. Only one has to hit out of the 3 that I just placed tonight. And guess what? I'm going to step back to the plate tomorrow night, too. I'm going to do the exact same thing tomorrow night. So earnings flips, there's 15 per season. Quarterly, okay, pre-earnings huddle with Blake Young. So on a quarterly basis, so we're coming close to the earnings season, right? It's usually right when the financials kick off the earnings season. So like a day or two before JP Morgan, literally day or two before JP Morgan releases earnings, Blake Young will actually hop on a call. So why do I have Blake involved? Because I don't mind saying this. I'm pretty busy these days. I want someone, okay, that is literally going to work all the analytics on this trade before execution. And Blake is the guy to actually do that. So even though I do 3 trades today, like a little bit off the cuff, okay, Blake's actually really going to fine tune this. And Blake actually has a better directional feel, in my opinion, than I do on here. So Blake's our guy over there. Again, the earnings flips. It's $900 a year. In addition, you have a watch list. Okay, it's over 100 different instruments that I'll actually look at. Okay, as the markets change. And then again, how to place your first trade. How to place your first trade. The video I'm just putting together is how to place some of the first earnings flips. This could not be more straightforward. There's a master class, and then you're just going to trade with us for a year. And in the course of a year, obviously there's 15 earnings trades per season. As I said, that's easy to hit. Easy to do that. It seems like a lot, but you kind of stack like 3 trades here, 3 trades here. You do 6 trades in a week. Okay, it's nothing. Look, Blake Young. Blake Young's actually been with, he's actually worked with me for almost 20 years of that 24 years. Okay. He's getting a little more gray out there too. A few more rings around the tree. Anyway, Blake actually worked with us at Thinkorswim very early on as well. We actually pulled him out of being a CTA, it's commodity trading advisor, okay, and a hedge fund manager. So Blake, though, has built a number of courses here at, of course, at TheoTrade. But again, he's going to be instrumental in actually helping me execute and monitor some of the trades. And we brought Blake in because, quite frankly, as I said to you guys a moment ago, he's just simply better at being able to be, spend the time quantitatively to get into these strategies. So there's a 90-day money back guarantee in here. I don't mind saying that. Like, look, you hop in right now and come through an earnings season with us. You're like, but the earnings are ending right now. That's exactly why we're doing this. So we hit like the peak of earnings season, kind of tapering off right now. Don't worry about it. You got 90 days. There's a whole nother earnings season in here. 90-day money back guarantee. It's theotrade.com/flip. That's F is in flip, L is in flip. Okay. It's theotrade.com/flip. When it comes to 90-day money back guarantee, I say this every single time I pull this up. Like, we are just absolutely no nonsense. At TheoTrade, we want people that want to be here. We want people that want to not only learn this stuff, like there are some people, and the reason we do the master class here, there's some people that just they want to see how the sausage is made. Like somebody asked, like, hey man, it's kind of cool, because you're actually going to show me why you're using a $5 wide spread. I'm not a big believer of just sending you alerts without having anything to back it up. Like, I got to show you, why am I doing this? Because if I don't show you the criteria, how do you even know there is criteria? I'm going to show you everything. Okay. I want you guys to be able to, you know, the fish for yourself, if you will. I hate that cliche. In all seriousness, I want you to email me and be like, hey, I don't like your bullish trade. I'm doing the trade bearish. I love that stuff. Take the other side of me. Okay. It's not about fishing. It's about being able to, like, you don't like my trade, do it yourself. And I love that. Like, we give you 90-day money back guarantee, though, because again, we want people that want to be here. And I don't want anybody to think like there's no complication to this trade. It's clean. It's cut and dry. We literally text you that crap out and shoot an email to you. Okay. And good, done. All right. Look, there's no stipulations in the money back guarantee. It's 90 days. Come with us. Check it out. So, literally, we're confident, very confident in this strategy. So confident that's one of the reasons we give you the 90-day money back guarantee. Okay. I mean, the proof's in the pudding. It's why we do this. And we, again, as I said, we want people to be comfortable with it. We want you to obviously realize, okay, that there's a ton of earnings trades still coming up as well. So I don't want you to think like, yes, is there a dead season coming up? Yeah, it's like Thanksgiving week and like Christmas week. But in 90 days, oh, you'll know. You'll know if it's for you. I mean, don't judge just on tonight, okay? But if you look at like last week, and again, statistically speaking, you do like 30 trades in 2 different earnings season. You only have to hit a handful of those to make this positive expected returns. Okay. Yeah, David S was actually saying how many strikeouts per home run. I'm averaging about a 1-3 batting average right now. I'm hitting about 1-3. Okay. And if you look at the returns though off of it, it works. Okay. So there's actually I put together like this whole synopsis of a proof. I'll do it during the class. I'll actually show you the entire proof during the class. Okay. If you have a trade that pays out at a 1-4, for every dollar you risk, you can make 4, but you're hitting it at a 1-3, okay, batting average, you have positive expected returns. I'll show you exactly that. It's proofing what we term expected returns in there, if that makes sense. All right. So, by the way, on the money back guarantee, there's no stipulations, no excuses, no whatever. Okay. If you want your money back, just email us anytime. You don't have to call us. You don't have to do a little dance, make a little love, get down tonight. As I said, we want people that want to be here. But even moreover than that is that again, we're really confident, obviously, in the strategy itself, and that's important, incredibly important. So yeah, there's no additional margin for this. Like, it doesn't tie up a lot of margin. Let me read off a couple of names. So as you guys are actually enrolling, I'll read off your name. So it takes me 5 to 7 minutes before I actually see your enrollment come through. But Jagdish S. from Rhode Island, Richard P. from Texas, Lawrence H. from Florida. Just the first couple of names I actually see coming through over here. All right, let me get into it. So here's the masterclass. So the masterclass, okay, I'm predominantly going to teach this. I'm going to bring Blake on for sure because Blake is actually, as I said, it's kind of a quantitative trade. And before I actually send out the alerts, okay, Blake is basically the right hand individual that's actually going to help me through all of this, meaning that you're sending out three different trades. Okay, I need somebody to actually send the trades. I need somebody to proof everything. Okay, it's good. And that's exactly what I want to do. Okay. Um, all right. So sorry, we're talking about sending out the trades, and the guys are like, "Oh, did he do this? Did he do this?" Okay. I'll send all the trades to everybody. Okay. And I'll give you. By the way, Sue will drop the phone number in there. Okay. Actually, I think Jeff just did that. 623-244-5657 is the number. It's just above Sue. It's just above your commentary over there. Two above your commentary, but Jeff can post that in there. Look, in the master class itself, okay, we're going to teach you the ins and outs, okay, of the entire strategy. In the master class, like the way it breaks down is it's all criteria driven, but the way I'm going to do the class is I teach you the logic of it. I teach you what expected move happens to be, and then I actually teach the criteria itself for entry and exit. The class is completely no holds barred. Like I'm going to go at you, right? And when I mean I'm going to go at you, like I let fly during the class because what's cool is we give you the archives of the class, and if there's something you do not understand about the class, you can email us anytime. Okay, we give you unlimited email support. Okay, here at Theo Trade. Which, look, you got questions, ask them. It's good, right? So I'm excited about the class. I like this particular class. I have to like the class that I do. In the earnings flip class, I like it. And in the earnings flip class, it's coming up November 12th. And again, I want to state that. I want to make sure everybody understands it is November 12th. Is it on here? Okay. November 12th, okay, will be the class in there. So I don't think I put it on here either. Okay, November 12th, I think we're 8 a.m. Pacific time, 11, okay, 11 Eastern. All right, onward and upward from there. Earnings flips alerts. Okay, there's 15 high conviction trades per earnings season, right? That's the absolute minimum. All right, that is the absolute minimum. So I'll get some of those questions here in just a moment, but that's the absolute minimum. As I said, during peak earnings season, on like a Wednesday or Thursday, I won't overburden you guys with like too many trades, like get crazy, but I'll do three trades like on a Thursday or three trades on two usually two trades on a Wednesday, three trades on a Thursday. Okay, so I'll hit like five trades, but there's sometimes there's nights where you get like Apple comes out and Google comes out and Microsoft comes out and Amazon all packed into like 2 days. I love that time. Okay. Netflix, is usually like the week before that with a side order of a couple of the banks, right? By the way, Ken was actually saying the trades today are going to be sent out as alerts. Yes, they are, Ken. I'm going to shoot them out. So I'm going to shoot them out as soon as I'm done over here. In fact, that's why I was typing off the side of my screen over here because I can see our crew is trying to figure out exactly which strikes I did. I moved pretty quick over there. So our crew is trying to figure out exactly what it is that I was actually doing in here. So let's just go back for one day. Watch this. We'll just go back and we'll actually show them exactly which strikes we're doing over here to make sure that the whole crew actually has it. Right? Posting the trades. By the way, obviously I placed a few other trades earlier today, so it's good stuff. Okay, so now I actually have the trades, and we can fire at will. Awesome. So 15 trades. Obviously, I just knocked out three of them. Last week we had I knocked out five trades. There's three. There'll probably be another two or three tomorrow. So you see how quickly we get to 15 trades, no problem whatsoever. Again, the retail value in that's about $4,800. Like because if you break down on a trade by trade basis, just to point out, if you just looked at the trades that we did last week, okay, if you're worried about the $900 or whatever, you only had to hit on one or two trades like last week, and you paid for basically half the class already. That's it. You didn't even have to do every single trade out there, and you basically paid for half the class, and that's doing 4 or 5 trades with us. So that's important. Like that's the idea, and that's why I say kind of come through here, and that's why we do the 90-day money back guarantee. Okay, it is good to go. We're confident, and that's why we offer the 90-day money back guarantee in there. So that's the master class. Obviously, the earnings flips alerts. Okay, this is the pre-earnings huddle. This is actually quarterly call. So Blake's going to spend, it's about 90 minutes on this quarterly call. And what Blake actually does in the quarterly call, he's just prepping you for what's coming. Okay. One of the differences is if markets get crazy and really, really volatile, okay, versus a lack of volatility, the cost of these butterflies, actually, interestingly enough, the more crazy markets get, the cost of the butterfly actually goes down. So it's good stuff. All right, onward and upward over here. There's anywhere from 80 to 100 stocks that I'm usually that kind of surface for the possibility of earnings flips. So we'll update you guys on that list. And it's pretty straightforward. Like I usually trade stuff that's very, very liquid. Like it's as straightforward as I can possibly be with that. Now, how to place your first trade. I'm going to walk you through how to execute your first trade. It's easy. Again, very, very straightforward over here, and eliminated all of the guesswork. So it couldn't be more straightforward than like you can literally, if you want, copy and paste the trade directly into certain trading applications. You're on your own. You're on your own with that one. Okay. So there's questions about exiting the trade, which I'll get to in a moment. Again, earnings flips. It's $8.95 for the year. By the way, another name just popped in here. Alvin H from California. Again, Alvin H from California. So there was a question that was coming up about earnings. What's on the horizon out there? People, there's a ton of stuff that's still on the horizon. Like, do not think that we're just like through earnings season. Okay. All I have to do is bring up like earnings. There's so many coming out, right? Again, there's so many earnings coming out that it just says 284 and you have to look down below. Okay. It's crazy how many earnings are still coming out. That's just this week. Even into next week, you're like, we're getting close to Thanksgiving. Thanksgiving falls late this year. There's 111 coming up like next Thursday, right? So it's on, people. Okay, it's on. There's a ton of earnings. Some of them come out like a Friday morning. There's just look at this, 128 coming out after the bell on Thursday. Okay, is that enough for you? And that, by the way, we're already into the week of like November 16th, and you're like, well, there's nothing but okay, we're into the week now, right before like Thanksgiving, and there's still more alerts coming out, and you can see, the different symbols of all the day alerts, and not all of them are liquid. Okay, like Ross Stores. I'm sorry, that's tradable. Okay, done. Okay, NTAP. Oh, network appliance. Done. Okay, Intuit. Absolutely. Why not? Look at where we are. Every week we could do it, but I really like to go hog wild during it. But there's plenty of them. And after we do the class, okay, yeah, you better believe. By the way, here's like even Thanksgiving week. I'm not gonna do it during Thanksgiving. That crap is wrong. But even the day after Thanksgiving, which is only a half a trading session, okay, there's still a number of earnings coming out. Okay. ZS, is that Zscaler? It is Zscaler. Okay. But again, there's tons of earnings. There's always earnings. So don't kind of pigeonhole yourself to thinking it's only these 2 weeks. There is like the apex trading, week, which was last week. Okay. It tapers off. Still more than enough though to feed off of in there. Anyway, so you get the earnings masterclass. The masterclass alone is worth $900 to go to. Okay, you get the earnings flips alerts. Okay, the quarterly earnings huddle call with Blake Young, the watch list, and of course how to place your first trade. I want to take you back over to the page over here so everybody sees this. Again, this is theotrade. Okay, .com/flip. Again, it's theotrade.com/flip. And as you scroll down this page, all right, as you scroll down the page, I'm going to refresh over here, make sure everybody can see this. Okay, we're refreshing the page. Oh, there's a lot of people hitting the page right now, so it's going to take a moment. Theotrade.com/flip. F is in Frank, L is in flip. Okay. Apparently, I can't refresh my own page over here. That's lovely right now. So we have a lot of people obviously hitting our server over here. So Robert K from Texas, just seeing that name pull up. The see if I can get it to come up. Oh, okay. Sorry, I'm breaking things over here. There we go. As you actually pull this up down below, okay, I just want you guys to see everything that's available on here. Again, the Intel trade, the Apple trade, the Amazon trade, some of the returns that are on there for this. But as you actually scroll down the page, one of the most critical things on here, and I should have showed this earlier, put your phone number in. That's the phone number we're actually going to text to. So you don't have to hide from us, the phone number. Put a valid phone number that we can actually text you. Okay, we'll also email these out to you. You can do a single payment of $8.95. You can do multiple payments here of $450, okay, or even $250. So again, there's no pressure because each and every one of these has has a money back guarantee on it. It's the 90-day money back guarantee on there. I just want everybody to be comfortable specifically with the money back guarantee because, as I said, we never want somebody that's like not comfortable being here. So it's 50 spots today on the 90-day money back guarantee. Now we do that. Okay, we put 50 spots to the 90-day money back guarantee. There's no question. That is to incentivize you. Again, that is to incentivize you. Okay, get enrolled. Check out TheoTrade. Trade a couple of strategies with us. Look, there's not too much stuff that you can do for $28 of risk or $48 of risk. Start slow. Right? Don't make it, just about like you got to get methodology down a little bit. Trade a couple of earning strategies with me, and we're good to go. But the retail value of this is almost $6,000. It's $5,797. Okay, and we're doing it for $895 for the year. In addition to it, okay, we give you unlimited email mentoring, and that's not just about earnings flips. You can email us about anything. You can email us about trade related questions, but that is I mean, to me, there's just nobody else. Like, what are you going to do? Get on the phone and like, oh, let's call Chuck. Chuck ain't answering the phone anymore. I'm talking about Charles Schwab. That used to be their commercial years ago, right? Call Chuck. Okay. There's no Chuck. Chuck does not want to talk to you anymore. That's important. Okay. That is important. Next steps. We're here to help. Email us. If you need us, email us, support@theotrade.com. Also, if you need us, call us 623-244-5657. Okay, 623-244-5657. Again, it's theotrade.com/flip. Now the link is obviously in the chat as well over there. All right, a little bit of Q&A. Now I'm going to go through some generalized Q&A, and I'll get to some specifics over here. But look, people always ask us what we need to get started. Laptop internet connection. People, you don't even need that anymore. Okay. Bring your mobile device. Okay. Ooh, I'm getting lots of trades right now. We're sending out trades. So if you guys are kind of curious over here, you can literally see us texting out the trades that I just did. So by the way, you got 3 for free. Let's see what pays and what doesn't. Okay. But to be honest, again, you don't judge on one night of earnings. Give it a couple of days. This is a wild time in markets too. So it's good stuff. It's good stuff. As I'm saying that right now, again, we have everything you're going to need to get started, from absolute beginner to the novice, just absolute novice, some of the most extreme traders. So relax about that because you don't have to do a lot of prep work over here. If you knew nothing about options, we can get you ramped up for it. Steve E from Tennessee, I see your enrollment coming through. As I said, it takes a while for me to actually see the enrollment come through. This is annual access to the earnings flips alerts. Okay, there's no nothing to know other than it's annual access. Not doing it like a month-to-month thing over here. It's just annual access. It's $895 for the entire year for earnings flips. Okay, and again, you just consistently, earnings season comes out, but you'll periodically, again, like why not? When NVIDIA comes out, NVIDIA is going to be an interesting one to actually trade. I actually love like some of the retailers, like a Walmart, Ross Stores, Costco. Those are all great opportunities over there. You can email us anytime, receive a response within 24 hours, including trade-related questions. So most of us here at TheoTrade, Okay. You don't have to email us and say like, well, my sister's boyfriend's dog had this question about trading. You don't have to do any of that. Just come right out with it. Seriously, come out with it because that's what we want to hear. Um, is you can look, we held every brokerage license imaginable. We can answer your trade related questions over here. It's not a problem. Now, a question I had not covered earlier, variations of the trades are available inside of an IRA retirement account. Okay. Here's the rule. You only have to have $2,000 in the account. And do not tell me for a sec, I can't do it. You have $2,000 in the account, you can do it. That's it. The $2,000 in your account, even if you place like one, trade a week, $2,000 in your account, you can absolutely do it. Okay. There is no restriction that you can't do this in an IRA. You can absolutely do it in an IRA. We at TheoTrade can actually help you get approved, option approval at several major broker dealers. So we know them all. I have a friend that actually runs Robinhood. I have another friend that runs E-Trade. Obviously, friends that run Tasty, friends that run Schwab. There's nowhere you can go in this industry where we don't know somebody, even interactive brokers. Okay. Remember, there are 50 riskless trade spots available. Get results, take action, enroll for TheoTrade now. There is absolutely no risk to you. Look, can you talk about some of the rules of thumb for getting out? Yeah, we will actually do that. Like, I don't want to be too evasive, but we'll actually do that during the class because you have to have a little bit more of a detailed understanding, okay, I'm actually going back to the trade itself just to be able to explain that. You have to have a detailed understanding. For instance, it's a $5 wide spread. How much should I make on a $5 wide spread? It's highly dependent upon what you actually paid for the strategy itself, okay? It has to do with time to expiration, okay? How wide this is, okay? And it'll come to you instantly. It'll click for you, but we have to know how much we paid for it, how wide the spread is, okay, and how long to expiration. And those variables will actually help you get out and get out profitably. Excuse me, I'm losing my voice over here. So excellent. A couple of people that are already enrolled for it. So Dr. Phil, okay, GTC order, okay. So you can use a GTC. For those of you that do not know what a GTC order is, GTC means good till canceled. You could GTC the order, but you really let fly. Okay, when I mean let fly, let me text you before you ever consider the GTC. It's not like crazy intensive where you're like, oh, I got to sit in front of the screen. Look, you put 3 trades on the day before. You can just, watch the marketplace open maybe the next day. And if I'm going to close them, I'm going to close them. Usually when they hit fairly early in a trading session. So it's not going to be, it's not exactly going to be rocket science getting at them. So very, very straightforward. Okay. But the exit of it is important. I prefer not to use the good till canceled. It is though, if you cannot sit in front of the screen, okay, it is permissible to do so, which is fine. So, Dr. Phil, we will definitely talk about that in that course over there. Again, the number there is 623-244-5657. Please, if you do need us, if you have any other questions, you can definitely call us. The most important thing is, we want to be able to answer all of your questions over here. Make sure your information is correct. Definitely put the phone number down over there. That phone number is critical because it's what we do when we're texting out those trades. In texting out those trades, it's like, look, that's the number it goes to. So again, theotrade.com/flip, theotrade.com/flip. So I'll stay here in the room for a couple of minutes, answer a few more questions. If you have a few more questions, we're here for you. If you want to call us, we can absolutely, we'll pick up the phone, answer it for you, answer anything else that you guys have for us. But I want to thank everybody for joining us today and have a wonderful afternoon. Bye-bye.